What's up, everyone? My name's Justin. I'm with the RealKeeper Home team here at eXp Realty, and in today's video, I'm going to be going over the market update report for the Jacksonville Beaches and Jacksonville Southside area as it pertains to February of 2023. Now, I've done previous videos like this, but this one I'm also going to dive into breaking down, the market demand and market supply as it pertains to these areas, as well as how the interest rates have affected the demand and the supply. So definitely stay tuned because you're going to definitely want to hear what I have to say when I come back. All right, welcome back. So before we get started, definitely like this video and subscribe to our channel, as well as hit the bell so you get notified when we post more content like this in the future. So to get started, we're going to start off with the amount of listings and the amount of pendings that occurred in February of 2023. So what we saw that there were 454 listings that were for sale in February. We also saw that there were 256 homes that actually received contracts in February. This left us with a 36.1% list pen to list ratio, which is a very healthy sign to show you how strong of a market we're in as far as seller's market is concerned. Now at 36.1%, this is going to bring us back to levels that we saw in June and July of last year, where many homes were going under contract. Part of this is because we saw a lower supply of homes hit the market due to current, typical market trends that tend to occur in January and February of any year. The other part of this is we saw interest rates come down for the first time, in about 6 to 8 months, and that occurred in January, which brought a lot of buyer demand back out in February. So it's not surprising that a lot of homes went under contract in February because buyers wanted to capitalize on those rates. So when you have a higher demand and a lower supply, that's going to definitely give you a higher pen to list ratio, whether if you're trying to or not for the area. Now, what we also saw is that the most homes that had contracts pending, price point wise, was in that $200,000 to $400,000 price range. That's pretty standard for this area because it's a very desirable area. So to have homes in that price point definitely makes sense that those would be the most that go under contract because of how many people are trying to get into those areas. On the flip side, we saw that the most homes that were still for sale, the largest quantity, were homes between $400,000 and $600,000. This is going to be your kind of next level in these areas, and this is kind of the price point you do tend to see most homes hit the market for in these areas. We also saw the median price for the area was $559,000 for homes that were active and still in the market. Now you'll see here in this graph, behind me actually, you'll see that contracts pending and properties for sale started to actually creep closer together. This is a difference in trends from what we've seen in previous months, and the biggest reason for that was because of the lack of supply hitting the market, and also the amount of demand that started to come back onto the market due to the rates. Typically, when you see those two lines on the graph separate a little bit further, that tends to give you a pretty good giveaway that you're starting to kind of get more into a lighter seller's market, not necessarily a buyer's market, but just, not such a super hyper seller's market like we had last couple years. And so the fact that these two lines are going to creep closer together could mean good for sellers, could mean that as buyers, the competition's kind of coming back. And so we'll have to kind of keep monitoring that in future months to see how that continues to go. Now, we also saw that in the last 6 months, we had 916 homes go under contract with a median sold price of $441,000. That is pretty interesting. We actually saw the number, it used to be over 1,000 a couple months ago for the 6 months of data. And so to be under 1,000 just does go to show that there are less homes in the market, and also there's just less buyers in the market. So when you have less of both, you're bound to have less homes selling. We did see also that 342 homes did not sell. They did not stay on the market. They actually came off the market. This could be for a variety of factors. It could be a situation where the home may have been priced too high. Could have been a situation where the home, the condition wasn't where it needed to be. Could just be, again, that the seller just chose not to sell anymore and to stay where they're at. So those are just a couple of different factors, but there are many others. Now, as you'll see here, the days on market is always going to be very important when figuring out, how long the homes are selling for and how that affects price. And what we did see is that for active homes in the market, the median days on market was 37 days on the market. Now, how does that compare for sales in the last 6 months, and how does that compare for sales in the last month? Well, for sales in the last 6 months, we saw that it took about 35 days for houses to sell, which is less than what our median days on market is. This is just, again, goes to show that homes may be selling, but they're selling at a slower pace than they were, 6 months ago. Now, how does that compare to 1 month ago? Well, 1 month ago, we saw that sales were taking about 46 days to occur. 46 days to down to 37 days, that's a pretty good difference. And again, the 46 days for the last month, that does just go to show that despite rates coming down, it did take a little bit longer for most homes to get buyers for them. So we'll have to continually monitor that in future months to see how February turns out and March turns out as far as sales go, to see how that stacks up. But right now, what that does mean is that if you're actively in the market and you're seeing homes in the market 30, 60, 90, 120 days, there's a good chance that they are probably in the process of getting close to getting an offer, or maybe close to getting a contract wrapped up. And so these homes are ones that sellers may be willing to kind of negotiate more on, because they know that they're kind of that sweet spot of where it's about time to get their home under contract. Now, we also saw that median list to sales ratio for this area was actually 97.9%. This is a slight uptick from last month, and realistically, this just again goes to show that sellers know they're not going to get list price, across the board. That's not going to be the case, for everyone. The top 10% are still not going to have those worries. But for most homes, they know they're not going to get list price, or they know that if they do get list price, they're going to have to give concessions in some other format, such as closing costs, to allow for buyers to maybe do a 2-1 rate buy down, or to just allow buyers to have their closing costs paid for. So that's very typical for most markets that we've seen really in the last 10 years or so, that if a buyer does come in with a good offer, they should be able to either get a small reduction on price or closing costs covered. Now, lastly on this, we did see here that the absorption rate for the area, that is the amount of months of inventory that we have available for this area, was actually 3 months of inventory. 3 months is actually a slight uptick over the overall area of Jacksonville, which was about 2.87. But at 3 months of inventory, it just means if no new homes hit the market, we'd be out of houses to sell in 3 months, 90 days. Which is, again, why if you see a home that you like and it's over 90 days in the market, you may want to start, consulting with whoever you're working with. And if you need someone to work with, someone like myself or my partners would be a great source to help with that, because those homes, it's not a matter of if, it's just a matter of when they start getting contracts. So as we look here, you'll see with these two graphs here, we actually saw that the median sold prices for February actually did come down quite a bit from January. So again, across the board, prices are, relatively staying, keeping pace. But we did see for this area that February's homes sold for a lower price than January. On the flip side, as you can see, March is already starting to see an uptick. This February data may be a little bit of an anomaly in that sense, as far as, because a part of it just comes down to, okay, what's actually on the market and what's actually selling that's on the market. So realistically speaking, that will be a great one to monitor in future videos to see how the data stacks up and see if this is a continuing trend for the area where prices are declining at a pretty good rate, or if this was just a 1 month anomaly due to seasonal market conditions. Now, median days on market though, we are seeing that, that leveling off. January, February, both are in that 40, just under 40 to 40 days on the market. That's one that is probably not an anomaly, and we probably will start to see that still uptick a little bit more for at least 1 more month, maybe 2, until the summer comes. Summer tends to bring a different seasonal market where we do tend to see demand start to creep up some. And we do start to see supply creep up some, but typically demand outweighs the supply in the summertime. And so that tends to be a very hot time to buy, which typically reduces days on market for most areas, especially this area. So just something to keep in mind. All right, and then lastly, we're going to look here at this overall chart. And one thing I just wanted to point out is homes at lower price points are still hyper sellers market, where you have 1.7 months, 1.9 months, 2.8 months, all the way up to $600,000. Actually, yeah, $600,000. It's not until we get to that $600,000 to $800,000 range where you start to actually see it becoming more of a level market for buyers and not super heavy on the seller side, with 4.4 months of inventory. And to give you an idea, an equilibrium market, 6 months of inventory, that's when it's not a buyer's market or seller's market. So really anything under 6 is a seller's market, and really anything under 3 is what we like to consider more of a hyper seller's market, which is what we've seen the last couple of years. So as we move forward through this year, it will be very interesting, especially with rates starting to uptick again, to see if these reds and oranges turn to blues, or if they stay reds and oranges. So that's something that we'll definitely keep monitoring. So hopefully you like this video. Definitely, if you have any questions as far as what was discussed today, definitely, in the description down below will be a link to my calendar, my Calendly. So definitely set up a time to, just talk with me, to go over any of this data, go over any questions you may have about your possible home search, or even maybe thinking about making a move here in Jacksonville, and not sure where to start. I can definitely go over all the pros and all the cons of anything you may be thinking of to help give you the best viewpoint as far as what you should or shouldn't do with your home search. Other than that, I'll see you again in the next video.